Terra is a security and UST is a security. If you operate it like a security, you would normally have a bunch of accountants, a bunch of lawyers. You'd publish hundreds or thousands of pages of disclosures, and you would tell the world what the board of directors is, what's the management team, what are the reserves, what are the processes, the protocols. You'd have accountants, you'd have risk controls. You'd have transparency, you'd have reporting. Because this is kind of treated like a decentralized network, none of those controls were in place. And so when it blows up, you don't know why it blew up and who's responsible. Nobody knows how much capital they had or reserves they had.
It's been over a week since the Terra blockchain protocol imploded and caused the loss of about $40 billion. Millions of large and small investors were caught in the collapse. In addition, regulators and the media are using the incident to dissuade the public from investing in the cryptocurrency space. While the bad publicity is bound to have some effects on the crypto market as a whole, one market expert believes it could be of great advantage to Bitcoin. American billionaire investor and CEO of MicroStrategy, Michael Saylor, is one of the leading advocates of the largest crypto asset by market cap. In a recent Twitter space with Bitcoin Archive, Saylor discusses a variety of topics, including Terra's collapse and how it could affect the crypto space as a whole. He also extensively discusses some of the macro issues currently affecting the space and how it will all play out in the coming weeks. We will now take you to Saylor's interview. But before we do, please hit the like button, subscribe to the channel, and drop your comments in the comment section below. Thanks, and enjoy the video.
You've got a war on COVID, right? The Chinese shut down another province and shut down a Tesla factory, and that's freaking people out. So they're thinking maybe COVID hadn't gone away. And then you've got a war in the Ukraine, and we thought it was going to be short, and now it looks like it's going to be long and involved. And the perception is the West doesn't want the war to end. And then you had the Russian sanctions, and that kind of undermined everybody's confidence. And then you have the war, kind of the quasi-Cold War with the Russians heating up. It's kind of like, well, we almost don't want the Russians to settle the Ukraine thing. We want to double or triple down. So that creates lots of political uncertainty, right? There's a ton of macro uncertainty. And then you've got the war on the currency. There's a war going on in Japan right now. They're pegging the interest rate for the 10 years at 25 basis points. So in essence, it's yield curve control. And the Japanese central bank is printing infinite money to keep interest rates at zero. And that's the third largest currency. Meanwhile, if the Chinese shut down their economy and they print infinite money, that's the second largest. The next currency. The Europeans are embroiled in this conflict in Ukraine with the Russians, and they got the standoff of whether they buy or don't buy Russian oil and natural gas. So you've got geopolitical anxiety, you've got some monetary anxiety, and in the mix of that, the Federal Reserve has gone from buying assets and pegging interest rates low to not buying assets and raising interest rates. So I think that's kind of a perfect storm, and then you can layer on a few other political agendas that are all inflationary. So we're declaring war on everything right now. And I think that has spooked the market. Terra is a security and UST is a security. If you operate it like a security, you would normally have a bunch of accountants, a bunch of lawyers. You'd publish hundreds or thousands of pages of disclosures. And you would tell the world what the board of directors is, what's the management team, what are the reserves, what are the processes, the protocols. You'd have accountants, you'd have risk controls. You'd have transparency, you'd have reporting, and everybody would understand what's going on, at least in the back, to drive the security. But because this is kind of treated like a decentralized network, none of those controls were in place. And so when it blows up, you don't know why it blew up and who's responsible. Nobody knows how much capital they had or reserves they had. And I would just contrast that to, say, MicroStrategy, where if you really read this rumor, you can just go to our website. We have thousands of pages of investment disclosures. You can read the terms of the first convert, the second convert, the junk bond. You can read the terms of the Silvergate loan. You can look at the management presentations that are recorded. You could see the auditors. You could see the 10K. You can read 10Ks for the last 22 years. Right? I've been a public company officer for 96 quarters. You can find 96 10Ks that are on file. Read them all. Have your own opinion. Thousands and thousands of lines. So I don't think it really much matters, whether someone attacked it and wrecked it or whether it was the free market or whatever. I mean, I'm not invested in crypto tokens. It's kind of sad for people that are invested in it, but most important takeaway, Archie, is, it's like, if I pull up coin market cap right now, let's see, and I look at the upper left, it says there are 19,419 cryptos. Okay, well, I know there's one that's a property that's decentralized, which is called Bitcoin. And there might be a debate about like half a dozen forks of Bitcoin and whether they are or they are not decentralized. And then the rest of the 19,407 or whatever the number is, they're all securities, right? They're all securities, right? Which means that they're all unregistered securities and they're opaque and nobody knows. They've all got management teams. They've all got foundations. They've all got ICOs. They've all got pre-mines. They've all got protocols. There's stuff going on. It may work. Someone may wreck it. You trade them at your own peril, right? And I think that a lot of people don't understand this, but I think that the Terra implosion is just a reminder that that in fact if someone can do something, right, then it's not decentralized. I can tell you for sure, I don't have any control over Bitcoin, right? I can't do anything. I can't print more of it. I can't change the protocol. I have no interest in changing the protocol, but if I wanted to, I couldn't. Wouldn't know how to. And the only reason I would invest in it is because I'm reasonably certain that I can't change it. And hopefully this will educate an entire generation of crypto people into the merits of a truly decentralized crypto asset network and the difference between crypto property and a crypto security.
Saylor also explains that a collapse of the stablecoin economy will drive a lot of money into Bitcoin. Saylor owns around 18,000 Bitcoin in addition to MicroStrategy's over 129,000 Bitcoin holdings. So, if anyone should be excited about the prospects of more investors for Bitcoin, it should be Saylor. Here is Saylor's explanation.
If all the stable coins go to zero tomorrow, it's going to accelerate the migration to Bitcoin. It's going to accelerate the regulation that's going to legitimize the asset class. It'll be good for us. So your worst case is going to be good for Bitcoin. If it doesn't go to zero tomorrow, that's okay too. One way or the other, I think you can expect that legislation to provide clear guidelines for issuing stablecoins is going to be fast-tracked. When Senator Toomey asked Janet Yellen about this 2 days ago, yesterday or 2 days ago, it literally is like just right now, he said, "You think we can get this done this year?" And she said, "I would think it would be appropriate to get it done this year." And I think that the Congress was slowing down this because they couldn't agree amongst themselves. Like there was a view that, the administration shouldn't do that much because they might hurt the retail investor. Gensler said someone's going to get hurt and we should lay down clear lines. The crypto exchanges should be regulated and most of these tokens are securities. And then you had Congress saying, well, Mr. Gensler, Chairman Gensler, don't go too fast. You might hurt the retail investor. And then you had a little fight over, is it FDIC banks or federally chartered banks or state banks, or should it be money transfer agents that can issue stable coins, or should we do nothing? Right? And then you have the crypto lobby that have been basically lobbying against clear guidelines to come out of the SEC or out of the administration. They want a more permissive environment. It's pretty clear now that what would be really best for Bitcoin is if we define digital currency versus digital security versus digital property with bright lines, if there was a law, and if there was clear regulatory guidelines, because then you'll have an avalanche of institutional capital flow into stable coins, and you'll have an avalanche of institutional capital flow into Bitcoin. And it'll probably be a big shakeout. Well, how many of the 19,000 crypto security tokens will exist? Right? Maybe there's a massive shakeout. There really should be a shakeout. And ultimately, that eliminates confusion. Because I think that right now Bitcoin is undermined by guilt by association with all the other securities. There wasn't political consensus to move forward. I think that the Congress was fighting the administration on this a bit. And I think that this meltdown of Luna will create consensus that we need to move forward faster. So
So that
rather than focus on the negative, which is there more contagion coming, I would say focus on the positive, which is the contagion you've seen has created a consensus to move forward with clear regulation, which is going to be good. It's going to move the asset class from being a $1 trillion asset class to a $10 trillion asset class. And we can't move forward without clarifying the definition of a security versus a currency versus a property in the eyes of the banks and the institutional investors and the politicians and the regulators.
In other news, Terra's Do Kwon is facing legal prosecution in South Korea over last week's crash. On Friday, May 20, the Seoul Southern District Prosecutor's Office said it had started an investigation on Terraform Labs over fraud charges and other violations of financial regulations. The announcement comes just a day after 5 Korea-based crypto investors filed criminal complaints against Kwon and Daniel Shin, his Terraform co-founder. According to reports, the investors lost a combined sum of $1.1 million as a result of the crash. The Asian country's financial authorities previously estimated that about 280,000 Korean investors had put in billions of wons in Luna. Yet another new report reveals that Do Kwon might have been more involved in the collapse than he is letting on. Documents from South Korea's Supreme Court Registry Office reveal that Terraform Labs closed down its Busan headquarters and Seoul branch at the general shareholders meeting on April 30. Do Kwon was the liquidator. On May 4, Terraform Labs Korea's headquarters was dissolved, and on May 6, the Seoul branch was dissolved, the documents revealed. Do Kwon is also reportedly facing a tax fine of $78 million for evading corporate and income tax payments. There are also reports that Kwon has not been in contact with the Luna Foundation Guard team, even though it's been almost 2 weeks since the crash of both crypto assets. What do you think is happening with the team? What are your thoughts on Michael Saylor's interview? Please drop your comments below, and don't forget to like this video. Thanks for watching.